Hey guys, RC Peck here. There are two themes that run through my investment life. One of the themes is I look to where people are saying to themselves, this doesn't make sense. This doesn't make sense. And that's a main theme that runs through how I teach people to invest and how I do invest. The second theme that runs through my investment life is looking to where things are so obvious that you just can't see them because they're right in front of you. And once you hear it, you're like, oh my gosh, you're right. That's so true, but I never saw it. So it's the second one that I want to talk to you about, and it's about where money can be invested and how money is invested. And I want to jump behind the computer and show you specifically what I'm talking about, because to me, this is one of these core principles that once you know this, you can literally start building your investing on top of it. And once you know this, it literally gives you an edge. And you often hear about how do you get an edge and where do you get an edge? And it's not about data, it's not about information. I think a big edge is point of view and being able to see things that other people cannot see, especially those things that are so obvious. So give me a second, let me jump behind the computer so I can get my images and I can show them to you. So give me a second. All right, guys, I'm behind the computer. Again, this is RC Peck, and this is my weekend podcast. So good to have you guys here. So let's get down to the theme here. And the theme is we live in a closed system, right? When you make money, you are already fully invested. So let me describe what that looks like. If you work, whether you work in the UK or the US or China, you probably get paid in the local currency. So let's just stick with the US because that's where I am right now, and that's how I get paid. I get paid in US currency notes, the US dollar. So as soon as I generate that and someone pays me, I'm fully invested in the currency quadrant, right? So that's, I get US dollars, I am then long the US dollar as soon as somebody pays me. Or if you work at Oracle, which is in Redwood City, where I live in Silicon Valley, you're paid in US dollars. If of course you live in the US, and you're fully invested in this currency quadrant here, and specifically the US dollar. So you're fully invested. Now, the thing about currencies, again, the yellow quadrant, is we know through history that currencies grow your money about negative 3% a year on average. So you don't actually want to be in currencies for a long period of time because the trend is absolutely against you. So anyone who has their money, quote unquote, parked or set aside or put aside or sitting, none of those are true. It's not parked, it's not set aside, it's not sitting on the sidelines. It is invested, or it is long the currency that it is in. And all currencies have a growth rate of a negative number, whether it's a negative 3% like the US dollar, or a smaller currency where that would probably be more of like a negative 5 or 6%. But it's a negative. So there's no such thing as setting your money aside, especially if you have that money set aside to pay for medical expenses in the future. At least here in the US, medical inflation is somewhere between 5 and 10% a year, depending on what type of medical help you need. So there is no such thing as setting your money aside. Now, the other three quadrants, you have bonds, which are basically corporate or government bonds. You have stocks, you have private stocks, and you have publicly traded stocks, and you have physical assets, which are real estate or commodities. That's it, guys. That's the closed system. You cannot invest outside of that. All your money is in here. So the question then becomes, okay, if there's really four main places to put your money, and really currencies is not a place that you're going to want your money that long, you're kind of left with these three. And so when I went through this in the 1990s, when I was learning about investing, I did the research and I found that the stock market has the best long-term growth of any of these quadrants. Now, maybe not each week or each quarter or each month or each year, but when you step back in, say, 10-year increments, you start to notice, man, stocks beat everything, but not all the time. So knowing that you're in a closed system, then you have to ask yourself, okay, well, money has to be flowing to one of these. It's unlikely, I only know this because of studying the flow of money, but it's unlikely that it's going to be flowing into all of these equally. And so the question then becomes, okay, well, where is the money flowing? Because if the money is flowing in one of those areas, that means the price is going to go higher. And so I want to know, of these four, I'll bring currencies back in, of the four, which one's price is moving higher or faster than the other three? Because once you know that, man, you know almost everything you need to know. You don't need to know what individual stock to buy in the Chinese stock market if you know that China's not getting the flow of money, or nor is emerging markets, or nor is international if you live in the US. Then you don't need to know the best Chinese stocks or Indian stocks, because money's not flowing to those countries or emerging market or the international market, right? So knowing where money is flowing, that almost gives you all the information you need. Right? And I will often or sometimes have someone say, well, but what stock do I buy? Look, I think that's the wrong question. I think the question should be, okay, well then what's the symbol if it turns out that money is flowing into stocks? And then if you look at the best location, you learn that it's the Chinese stock market. Well, if you just knew that, you're going to beat everybody. Like, you don't even need to go to stocks. So let me kind of dive into a little bit of each one of these. So if you look at this price chart here, this is comparing the bond market, the US bond market, against the US stock market. So if that line that you're looking at is going higher, that means the bond market, the US bond market, is where more money is flowing into than the US stock market. So when the line goes higher, money is flowing into the bond market. When the line is going lower, the bond market is losing out to the stock market. Now, what's great about looking at a price chart like this is you can literally tell where the money is flowing. In this case, if the line's falling over time, more money is going into stocks than bonds, which is super critical, because to me, one of the most stable things you can do, one of the most steady things you can do with your money, is making sure that it's in the stable uptrend, whether it's stocks or bonds. And this price chart is showing you that, oh, okay, at least right now, and this isn't about what it's doing right now necessarily, but just kind of thinking differently about how to invest, so you can only need to look at those few critical things, or those few vital things that make all the other things irrelevant. So when I look at this, I see, yeah, bonds have been underperforming to the stock market. Again, it's very clear because it's in pictures. Now, this is a price chart of physical, and I have H in parentheses for housing. So this is US housing compared to US stocks. And again, it's the same idea. If the line is falling, in this case, that means housing, physical, because housing is a subset of physical, is underperforming the US stock market. And as you look at this from 2009 until today, it's generally been underperforming the stock market. Now, the reason why people like real estate is because the price doesn't change every second, and you're not hearing the price of your real estate talked about on every news channel. So it feels like it gives you more stability. But again, for long term, one of the things you want to know is where money is flowing, because that's where the stability is, that's where the stableness is, that's where the consistency is. Sticking with physical, this is the other part of physical, which is commodities. So if you look at the screen, you see again another line. If the line is falling, that means commodities are underperforming the US stock market. And if the line is going higher, that means commodities is outperforming the stock market. And at least my brain can see very clearly that from mid-2011 continuing until today, commodities are underperforming the stock market. So once you start to know the flow of money and understand that we're in a closed system and there's really only 4 main places to put your money on the planet, and to know that as soon as you get a paycheck, or as soon as you're paid, you're fully invested, this starts to give you more movement, more stability, because it's like, oh, I can't actually set my money aside, so let me find that stable area. And if fearless wealth is about anything, it's about finding that stability, finding that consistency, finding that stableness. And then lastly, I'll just bring in currencies. I'm only going to show you one currency. And look, I'm biased. I live in the US. I get paid in US dollars. But even if I didn't, the US dollar is the most traded
currency on the planet, whether it's a fiat currency or not. I mean, it is a fiat currency, a currency backed by the good faith of the government that prints it. But again, you can look at this and say, okay, if this line is falling, that means the US dollar is underperforming the US stock market. Again, this gives you clear direction on where money is flowing. And once you know where money is flowing, that's where you find the stability. You don't find the stability by having some financial advisor ask your age to figure out how much you should have in stocks or bonds. To me, the most important ingredient is knowing the direction of the flow, meaning which of the four is it going into? Has it stopped? Has it changed? Is it going into corporate bonds? Is it going into government bonds? Is it going into U.S. domestic stocks? Is it going into large cap stocks, small cap stocks, international stocks, emerging market stocks? Is it going into real estate? Is it going to commodities? So by asking yourself the right questions, you're able to eliminate the noise, at least eliminate an incredible amount of noise, and really get clarity on where your money is treated best. Okay, so what are some of the takeaways? I think the biggest one, guys, is you're always invested at all times. There's no setting money aside. If you have money in cash over the last 5 years and there's 500,000 sitting in cash, it's not sitting in cash. It's long the currency that it's in. So if it's been in the Canadian dollar, you've been long the Canadian dollar for 5 years, which probably isn't that good of an idea, because if you look at the Canadian dollar compared to, say, the US stock market, even the US dollar, you can see, wow, I'm actually losing a lot of purchasing power. I just don't see it. So guys, know where the flow is. Know where the flow of money is going, and you can tell that with price charts. When you know the flow and you realize that we live in a closed system, you found the stability. That's how you find stability. It's not in a pick. I mean, I talk about pick of the month newsletters, guys, but it's really, they don't even pitch you picks anymore. They're like pitching you a new service each week. It's like pick of the month newsletter, but it's not even picks, it's service of the month or service of the week. I mean, they keep pitching you so many things. That's why you're feeling overwhelmed. And then if you want to know where the consistency is of how to consistently protect your money and grow your money, it's knowing where the flow is. It's knowing where the stability is. It's knowing that you're always invested at all times, which again, that core principle is you are always invested. There is no such thing as setting money aside. And today, guys, knowing where money is flowing is so important because we have so much instability in the market. There's so much manipulation in the market, and money has to still be flowing somewhere, right? So regardless of manipulation, right, or intervention, or over this or under that, money still has to stay in one of those four areas and flow to one, and it's always moving to one. So guys, this is super important. It's such a key concept and key principle, but no one talks about this. So now we're talking about it. Hey guys, this is just another step in helping you protect your portfolio and your future. Until next time, this is RC Peck.